Good morning, Banter fam. Welcome back to the most alpha-packed crypto show on YouTube, where I stream every single day at 1:30 a.m. EST to deliver you guys the best alpha when it comes to DeFi, yield farming, and crypto strategies to help you guys profit and succeed in this crazy market. In today's show, I'll be showing you how to best prepare for the impending crypto rally to put yourself in the best position to maximize profits. It's going to be a massive show. You don't want to miss a beat. Let's get into the show.
Get the fuck out of bed, bitch, go. Get up, and get the guy go. Time to wake up, bitch, get up. Get up, get up.
Before we get into the show, because it is absolutely jam-packed today, I want everyone here to smash the like button to show me some love, because I'm going to be giving you some absolute alpha here. I'm going to be dropping you some of my favorite strategies to profit when the market rallies, and trust me, eventually we're going to see a rally, and you guys want to be prepared. So smash the like button, Banter fam, show some love on the video, and let's get straight into the show. What a night we had. So we saw the CPI data come in at 7.5%. The market was expecting the data to come in at 7.3%. So we slightly overshot. And that is why we saw a pullback in the Bitcoin price. The market had priced in a slightly less severe CPI inflation data, which meant that we did get a slight dip. So if we look at the Bitcoin price here on the charts, we were traveling quite well. So we broke through our main trend. We made a push up all the way to 45, 46K just before the CPI data. And then when the news came out, unfortunately, we did have a slight pullback where we dropped down a few percent here, down to 43K where we're sitting right now. I just want to kind of weigh in on this and give my opinion on the CPI, because it's really important to step back and look where we sit right now. I think that a lot of these rate hikes are actually priced into the market, and that's why we haven't seen such a severe dip after the CPI adjustment. 43K isn't the end of the world. We were always expecting a slight pullback after making that higher high in the 45K region. So I'm not too concerned where we sit right now. In fact, that's why I'm here planning some great strategies that you guys can use if the market rallies, because I think if we do see a slight pullback in the Bitcoin price, we can see some really good opportunities to start collecting some alts to profit in this market when we make the next push up. So we could potentially come down to the 40K region. That's a scenario for sure, and it's a scenario we've been planning for the last week or so. But I don't mind raging in this range right now. And obviously the CPI data was slightly less than ideal, but I don't think it makes a huge difference. It's 0.2%, guys. Like, it was mostly factored into the market anyway. The market is now pricing in those rate hikes. So I think anything positive, any positive news coming out now would be really, really good for the Bitcoin price. We saw Root2FI, he did a post on this. CPI 7.5% versus 7.3% market. Let's dump it. It's quite funny there that we got such a severe response. We actually saw the Bitcoin price bounce back straight up after the CPI was announced to be 7.5%, and then it came straight back down again. So a lot of volatility at the moment because the market's trying to kind of work out what Bitcoin is. Is it an inflation hedge like we think it is, or is it a risk on asset, which it also is in a way. So the market is really trying to figure out what Bitcoin is, and the same can actually be said for gold, because as soon as the CPI was announced, the gold price also dropped from 1,835 down to 1,820. So pretty much all assets that rely on high inflation don't like this news because of the rate hikes. But as I said, I'm pretty confident that they're already priced in. So we have to start kind of planning for the future here. We have to start thinking, how can we set ourselves up if the market does rally to actually profit? Because we want to be in a position where if the market starts rallying, our portfolios are set up in a way that we can maximize our profits. And that is what today's video is dedicated to. It is helping you guys identify both the ecosystems in which you can profit in a rally and also the ways you can yield farm to maximize profits during a rally. So I'll be going through some really important strategies today that I think can really, really help you guys out. Just quickly, I thought this was quite funny. We consider Bitcoin an inflation hedge. Inflation is announced to be the highest it's been in 40 years, and Bitcoin drops. I find it quite ironic that, something that is considered an inflation hedge is dropping on news of high inflation. I just find that, a funny little fact there. But the Bitcoin dominance is something I'm really looking at right now. Obviously, as we're trying to position ourselves to profit from these altcoins in the market, we have to look at where we sit in terms of Bitcoin dominance. Because if the Bitcoin dominance goes down, that can indicate that we are setting ourselves up for a really, really nice alt rally. As we can see, the Bitcoin dominance chart has been hovering here. We just made a slight high here, but we've still got some resistance in the 42.8% region. If we can come down in the Bitcoin dominance and push back down to these levels, that 8% drop in dominance would mean a severe rally from the alt. So that's something I'm really keeping my eyes on. I'm sure Sheldon is going to cover this in the next show. So make sure to see Sheldon's take on this, because I'm not an expert chartist by any means, but I am keeping my eye on the Bitcoin dominance to see if we can break down here and break down further, because we all know that eventually this Bitcoin dominance will be dropping sub 40%. It's just a matter of time. We've kind of seen such a development in this space with all the new gaming and metaverse projects and hype coming in, all the new L1s and ecosystems. It's a matter of time before this dominance really breaks down. We just have to work out when that happens. And when that happens, we have to set ourselves up accordingly. There's no use sitting back and waiting for a big rally to happen and then adjusting our portfolios. We want to take action right now and start planning, getting ourselves in the right projects, getting ourselves in the right farms to profit when the market rallies. Because right now we have an advantage. We have the advantage of time. We can prep ourselves over the next week or two before the market rallies. So then when we do get a push up, when we get confirmation that the Bitcoin price is ready to break out or that the dominance is breaking down, we can stand to benefit the most. And that is what today's video is dedicated to. I just wanted to set the scene a little bit with where we're sitting with the dominance and the Bitcoin price. I'm not worried at all, but we could see a slight push down, which was confirmed by Alex Becker in this tweet here. He said, it's likely we're about to see a pullback / minor dip to sub 40 here. This is the point where I'll be getting really aggressive with meta / gaming coins. They should dip into cozy entry. Even if it's not super cozy and there is no dip, they are all in the shitter, aka easy 5 to 20x potential with what I feel is a solid up confirmation from Bitcoin. So he's talking in relation to metaverse / gaming coins, and I think they are going to be one of the biggest movers in the market. And at the end of the video, I'll touch on my picks in terms of gaming, but this is the important bit. He's seeing a pullback to sub 40, but this is also where he's aggressively loading. And that is kind of in line with my thesis at the moment, that if we do get a pullback from Bitcoin back to the 40K range or even the 42K range, as soon as we see signs of confirmation there, those can be really good times to average into this market. So right now, we got a plan. Because if we want to aggressively be buying when we get this pullback, we have to plan what ecosystems we're going to be deploying capital into. Obviously, metaverse and gaming is one, but I have a couple really nice L1 plays and some farming strategies to complement them, which I think will be really, really bullish. So we have to identify which ecosystems will be the top performers. And I have to start with Fantom, because I truly believe that Fantom will be one of those ecosystems that can outperform the market when we get a push up. It's shown some great growth and some great price strength recently during market volatility. It has come down a little bit, but Fantom is one of the ecosystems where we want to be positioning ourselves, because honestly, they've got the best yields in DeFi right now. The Fantom ecosystem is literally a DeFi playground. It's the one-stop shop for DeFi yield. It's the one-stop shop for yield farming. It's honestly incredible. And that is something I want to touch on first before I give some of my picks later in this video. But the Fantom ecosystem is definitely one of those ecosystems you don't want to sleep on when we get a push up, because we've seen some explosive growth through the altcoins. But first, I just want to kind of set the scene here with what's happened on Fantom over the past month. A few days ago with Ran, I kind of touched on some of the data that indicates Fantom is still growing at a really nice pace. And I can confirm that again today. Over the past month, we've had a plus 24% push-up in the Fantom TVL, which is super positive, even after the solid swap snapshot took place and we expected liquidity to be siphoned off the Fantom chain. We still have seen some really, really nice growth from Fantom. We saw TVL push up from 14. It's come back down to around the $10 billion region, which is super positive in my opinion. Getting this consolidation after making a new high in the TVL, we can set ourselves up for that next push up. So I really like how Fantom's looking right now. We can see even across the past week, obviously there's a bit of red on the daily with the Bitcoin news, but even over the past week, we've seen amazing growth in the Fantom ecosystem. 2 days ago, I gave you Beethoven as one of my top picks. That's already up 37% for TVL, and it's shown some really strong price action as well. So that is one of the plays that I really like in the Fantom ecosystem. But we can go and we can look at just how strong this ecosystem has performed. And we want to be looking at strength, because when we do get a push up in the market, we want to identify the projects that can outperform. You know, there's no use sitting in projects that when Bitcoin pushes up, you're not going to see outsized returns in, because the goal here as investors is to beat the market. It's to make life-changing profits. As Ram would say, life-changing profits, not just, you know, play money. Like, we're in here for some serious gains. So we want to be in the right projects to be able to deliver those gains. And that is why I love the Fantom ecosystem. I'm going to start off by recapping a strategy I showed you a couple days ago, and the yield has absolutely exploded on this strategy. And you don't want to miss this strategy I'm about to show you to do with the Fantom ecosystem. But we have to just cover a little trick that I found. Before I show you that awesome strategy, I want to show you a little trick that I found to kind of identify L1s that are undervalued. So there's been a lot of talk about why Fantom's undervalued. I show you TVL ratios. I've shown you statistics to do with wallet address growth and transaction growth. But there is one thing that I think a lot of people sleep on, and this is a little secret when you're researching coins. This is one of the strategies I like to employ to be able to look into whether a coin is undervalued or not. And it's the fully diluted valuation. Something really interesting to note about Fantom is that fully diluted, its valuation is only 6.6 billion. It's got a market cap of 5.3 billion, but its fully diluted is 6.6 billion. Now, I look at this and I go, wow, that's actually quite incredible, because the fully diluted value to me is indicating that since most of the Fantom tokens are on the market, we're picking them up at quite good levels because there's limited supply. Now, if you want some comparison to some other L1s, if we go onto AVAX and we look at their fully diluted, it's honestly a stark contrast. They've got a market cap of 21 billion, but their fully diluted is actually 63 billion. So if we look at Avalanche versus Fantom's fully diluted, Fantom's actually a 10x from Avalanche, which is absolutely insane to me that we're seeing such a discrepancy here in the valuations. And that's why I think, obviously I love AVAX, I covered it yesterday, but that's why I think Fantom is extra undervalued, because the fully diluted is just so crazy. Like, it's a 10x off AVAX. If the market does rally, Fantom could be an easy 10x play to $20. That's just how I see the market. I love Fantom. I think it's an amazing chain. And if we do get that push up from Bitcoin into the 50, 60K region and alts start flying, the Fantom ecosystem will likely fly, and we could see this price potentially 5 to 10x. And that is just a simple indicator that I'm using to kind of go off the fully diluted there. We can see, we can compare Fantom to other projects. It's still a 6x off Sol. It's still a 4x off AVAX. But obviously, as I just pointed out, the Fantom price fully diluted is actually a 10x off AVAX's fully diluted. So there's big room for growth in the Fantom ecosystem. But obviously, we already know that. We already know Fantom's undervalued. We already know it's a growing ecosystem. But you guys probably want to know, how can I take advantage? There's no use me hyping up project and not giving you guys strategies to be able to maximize your yield, because that's what we're all about here. We're all about DeFi. We're all about maximizing yield, giving you guys volatility proof profits to enable you to profit during market volatility and set yourselves up so when we rally, when the market pushes to the upside, you're in a much better position because you have more tokens. Just think about how yield farming works. You're actually accruing tokens over time, slowly and slowly, when the market goes up, when the market goes down. And over time, you're accruing more tokens so that when the market finally pumps, you're actually set to get the double benefit. You get the benefit of your original holdings that you've been farming, and you get the benefit of the new tokens that you were able to farm through DeFi, and you're actually profiting in a double benefit type of way, which I think is really awesome. And that is kind of what DeFi unlocks for us. It unlocks ways to earn yield while the market's down. And I want to be completely honest with you guys right now. I've made more profit off my yield farming in the past 2 weeks than I have in months of just holding the base token itself. You know, I've barely made anything off my Fantom token holdings because the price hasn't really moved. It's been sitting around $2 for a while. It's been kind of hovering in that range. But over the past 2 weeks, I've made some insane gains farming these tokens because that is where the real profit is in the Fantom ecosystem. So you guys probably want to know how to take advantage. And I've been saying this for a while now, so I got to show you guys. And it is LiquidDriver. I talked about this 2 days ago, but LiquidDriver is one of my favorite projects on Fantom, and the rewards actually just got a huge boost. So I showed you guys this strategy a couple days ago, but the rewards were only 90%. They're sitting at around 170% now. So it's a much better time to be getting into this pool now than it was a couple days ago. And that's why I'm giving you guys this update, because I always want to keep all of you updated with the best yields and maximizing your yield opportunities in this market. So we have to give you an update on LiquidDriver. Now, I just want to talk about the price a little bit. It's down 10% today. After it rallied, we saw the price push up to around $50, and we're finally getting that consolidation and pullback. I mean, this is a really bullish chart to me, guys. It almost looks like an extended bull flag. We're coming down from 53. We had that drop down to 20 during that huge downwards volatility with the Bitcoin price, and now we're kind of just hovering in this range here. Where we're around the $28 mark, and we've finally just pulled down to around $24. So we're actually in quite a good accumulation zone for LiquidDriver. Yes, we can break to the downside, but there is good resistance around $15 to $20, as we can see here, and you're earning some insane rewards in the meantime to mitigate downside risks. Now, if you don't know what LiquidDriver is, I did explain it more in my show a couple days ago with Ran, but just to give you a quick overview, it's a governance, they're governance token hunters. So they go out onto other protocols like SpiritSwap, they buy up governance tokens on other projects in order to boost their own pool so they can deliver the best yields to LiquidDriver holders. But there is a problem with LiquidDriver, and the problem is, in order to maximize your LQDR yields from staking the LiquidDriver token, you need to lock up for 2 years. And obviously, that's not satisfactory, because when you're holding a token for 2 years and you're locking it up, you don't have a choice. You're not liquid, so you can't choose to sell that token. You can't take profits. You're pretty much gambling that the token will be around in a few years. And even if you think LiquidDriver is going to be around in a few years, it's still not ideal not having flexibility and control over your token holdings. That is why Beethoven thought about this and provided a really, really awesome solution. And that solution was offering this awesome pool called the Pirate Party. And I spoke about this a couple days ago, but the yields have exploded on the Pirate Party. I hope I'm not wrong. Yeah, it's still 164% here. So they've just done a massive yield boost, and 164% is honestly insane. And you guys have to take advantage of this if you're bullish on LiquidDriver. Obviously, to farm LiquidDriver, you need to be bullish on the token itself. So do your own research on the token. I personally really like it. I hold it in my portfolio. And this is the best way for you guys to farm LiquidDriver right now. So what you do, and to pretty much summarize how to actually do this, you go into Beethoven. So you'll need a Fantom MetaMask wallet account, and you'll need access to Beethoven. So you can go onto Swap. You can swap your coins for Beethoven here, and you can come into swap it for LiquidDriver tokens, and you can come, once you've swapped for LiquidDriver, into the Pirate Party pool, and you can invest your LiquidDriver tokens for this 166% APR. So you want to come in, invest your LiquidDriver tokens, and then you receive BEETS in exchange. The really awesome thing about this pool is that it's 80% LiquidDriver, 20% Fantom. The problem with LPs is that since most LPs are 50-50, you're going to see rebalancing. So every time a token pumps, so if LiquidDriver 10x's, you're going to see some impermanent loss as the pool rebalances. The awesome thing about this pool is that it's a single stake effectively. It's 80% LiquidDriver, so you're not getting as much exposure to impermanent loss if any token vary significantly from the price of the other token. So the really good thing about this pool is that you're not locked up for 2 years. You can exit at any time, and it's effectively a single stake. 166% is actually awesome because it's a lot more than that. That is actually the APR. If we calculate 167% on the daily, that's 429% APY. You're earning 429% yield per year to hold LiquidDriver tokens. That is pretty mental to me that you can do that. So you can come in here every day, collect your BEETS as your rewards, take those BEETS, swap them for LiquidDriver in the swap function, and then invest back into this pool. You can invest your LiquidDriver tokens and receive all over again. And it's kind of this loop of just compounding yield on top of yield. And that is the awesome thing about this pool. However, I have an even better play. And I think that I am more bullish on the Beethoven token than the LiquidDriver token. And here's why. Just hear me out for a second. So Beethoven actually just introduced a gauge model. And similar to Curve, a gauge model means other protocols can come in, they can buy governance on Beethoven in order to receive voting rights. And what voting rights do and voting power does is enable these protocols to come onto Beethoven and boost their own pools. So what we're seeing right now, and I'm probably going to have to make a more in-depth video on this, is a kind of war for these BEETS tokens. We've seen a massive push up in the Beethoven X price because multiple protocols across Fantom, LiquidDriver, XJOE, I think One Ring as well, had a massive war for these BEETS tokens in order to get these voting rights. So the BEETS token I'm actually very bullish on, and that's why we've seen such incredible price action over the last few days. I mean, it's gone from 50 cents all the way up to 80 cents in the midst of market volatility. Even when Fantom's going down, the BEETS price simply doesn't care. And that is why I'm super bullish on this token, because when we see such strength during a downwards momentum in the market, that indicates to me when the market picks up, when things start pumping, it could actually outperform the market and be one of the best performers. But the issue is it's pumped, right? And we want to catch coins on dips. We don't want to catch coins on pumps. So that is why this strategy can actually tie into Beethoven as well, because you can invest your BEETS rewards that you earn from this LiquidDriver pool, come into the stake function here, and you can invest your BEETS into Fidelio Duetto, and you can receive FBEETS. FBEETS are the governance token of Beethoven. So you're taking your BEETS rewards from that LiquidDriver Pirate Party pool, and you're investing it under the stake function of Beethoven, and you're receiving FBEETS, which you can deposit into the FBEETS farm. In this farm, you'll be receiving 105%. So you're earning 170% off Pirate Party. Then you're coming in and you're depositing into this pool and you're earning 105% here. And you're also getting exposure to the upwards momentum from the Beethoven token at the same time. How incredible is that we're able to get such insane rewards on the Beethoven token, even whilst you're earning insane yields? It's pretty damn awesome that we can do this. And the Fantom ecosystem is one of the best places to earn yields in crypto. And it's one of the tokens that I'm personally most bullish on. As we can see here, the Fantom token hasn't performed so well. It has come down from the highs of around $3. I think it hit $3.50 at one point, $3.47. It's come down. We're in a nice accumulation zone here, but the ecosystem tokens are where you're going to earn the real gains in this market. And I want to segue to AVAX for a little bit now, because I talked about this yesterday, but AVAX is another one of those ecosystems which I think you can earn some insane profits in, because when the market turns bullish, you want to be positioned in the best L1s. We've already identified Fantom is one of the best L1s, but we're also identifying that AVAX is one of the best L1s. I actually did a thread on my Twitter which details, I think it's here, which details how to generate yield on AVAX. So in the description, there's a link to my Twitter. Go follow my Twitter. This is the pinned tweet. I post alpha like this every single day. And this is a really nice strategy for you guys to be able to utilize to earn yield on your AVAX, because the AVAX ecosystem is also one of the best ecosystems alongside Fantom to earn yield and really set yourself up for insane profits. I covered this more extensively yesterday, but I did miss an important fact in yesterday's video that I'll be sharing for all of you guys that are here today, and that is an extra step with the XJOE farming. So XJOE is one of the main dexes on Avalanche. It's one of my favorite projects on AVAX because when we see AVAX make huge pushes up, XJOE typically lags behind and then outperforms. So we can see over the past week, XJOE is only up 7% versus AVAX at 30%. However, I'm confident that if we get a push up from the AVAX price, that the XJOE price can catch up. So you're getting it at good levels. But that isn't the best bit about XJOE, which is the main dex on Avalanche. It's this staking function, which I really, really like. You can earn 35% on your XJOE as XJOE, and you can then stake your XJOE for another 16%. So in yesterday's video, I ran you through how to stake your XJOE, but I forgot to mention that XJOE allows you to earn yield on top of your XJOE. So it's very, very, very simple, guys, and this is how you do it. You take your XJOE tokens, which you can buy under the trade portal on Trader Joe. You take them and you stake them as XJOE. And then what you can do with this XJOE is you can come into the farm tab here. So you stake your XJOE for XJOE, you receive 34% APR compounding. So that means it'll automatically use to compound back into XJOE, which is super awesome because you don't need to use gas fees doing it, right? So you put your XJOE for XJOE, that compounds, and then you can come into the farm tab. And on your XJOE, you can earn an additional 17%. So you're earning 17% on top of 35% on your XJOE, which is then compounding. So that is almost equaling, I think, a 60 or 70% APY of holding your XJOE. We know XJOE is one of the best tokens in the Avalanche ecosystem. So if Avalanche makes a huge push up, if the Bitcoin price pushes up, you want to be positioned in the best ecosystem projects. And one of them is definitely XJOE. So the fact we're able to farm this token and earn a 40% yield or a 50% effective APY on this token whilst we're waiting for market direction is super, super awesome, because we want to be in a position where we're still earning yield no matter of what the market is doing. And that is the beauty of DeFi and this show, because I help you guys maximize your yield and I present some amazing opportunities for you guys to be able to earn yield in crypto. And we're picking up XJOE at quite good levels today. But I want to show you something to do in the meantime, because obviously tokens like XJOE aren't going to perform too well if the Bitcoin price continues to go down. And if Alex Becker's theory here is correct, that we do, I think I lost the tweet. Here we go. If Alex Becker's theory is correct and we go down past 40k Bitcoin, obviously coins like XJOE, since they're riskier, are going to take a hit. So maybe you don't want to buy right now. Maybe you just want to have it on your watch list and start DCAing. There's nothing wrong with dollar cost averaging during a downward cycle and prepping yourself for the next push up. And that is one of the theories that I really want to kind of explain to you guys, that dollar cost averaging is the best way to enter this market instead of just aping into coins blindly. So in the meantime, you probably want to know how to be able to earn some yield, because if you're dollar cost averaging into XJOE, you probably have some stable coins sitting on the side. And the Avalanche ecosystem does offer us some amazing places to earn yield on those stables. So then when you're ready to continue to deploy into projects like XJOE and LiquidDriver, as I just showed you, you can actually benefit even more because you've been accruing extra stables. And Yield Yak is a place that I really like for single staking. As I explained before, the problem with LP tokens is that you're constantly getting a rebalancing of the LP tokens, and you can lose some potential gains to impermanent loss. The beauty of Yield Yak is that you can come in and you can earn yield on single-sided vaults, which means you don't need to lose money to impermanent loss. You can come in and you can invest tokens single-sided, like USDC and AVAX, and earn yield on those tokens. Now, these are quite low yields, I admit, compared to things like XJOE, compared to things like LiquidDriver, but it's much, much safer because it's a single stake on a well-rounded protocol, which enables you to earn yield on stablecoins on AVAX. There's some awesome pools in here. AVAX, Yak itself is paying 30%. The Yak token, I'm bullish on the Yak token. I think this is a good option if you're interested in entering that. There's also 57% APY on XJOE here. So if you don't want to go through the steps that I just showed you on XJOE, you can skip that and you can get auto compounding in Yield Yak for 57%, which is a really, really good option if you want to take advantage of the XJOE strategy I just showed you. And also there's great places to earn a very, very safe 10-11% yield on your crypto. Obviously, there's smart contract risk whenever it comes to DeFi, so that is one risk you have to keep in mind. but there's no impermanent loss here. So maybe it's worth, instead of receiving 30% on your stables on something like 100 Finance, maybe it's worth taking a little less risk and coming into some of these pools and diversifying. Because the thing with stablecoin farming is I never preach having all your stablecoins in one place. You always want to be spreading your stablecoins across 3, 4, 5 DeFi farms, which enable you to earn yield in a less risk fashion. Because if you have all your stables in one place and that protocol gets hacked, that's a real disadvantage. You want to be spreading your stables across multiple protocols, and Yield Yak is definitely one on AVAX that I would keep my eye on. Now, the last sector I'm going to go through. So obviously we talked about Fantom being a great sector to benefit from this next market rally. We talked about AVAX being a great sector to benefit from a market rally. But gaming has to be at the top of my list right now. And I'm not the gaming expert, so you're going to have to talk to Hustle about this. He is the gaming expert. He just did a show before me a few hours ago. He streams every single day. I highly recommend watching his content, because gaming is going to be one of those narratives that outperforms the market. And we've seen this over the past week. Things like Gala Games up 78%, Phantasma up 65%, Veracity up 60%. And then we go and we look at the Fantom ecosystem, and the performance here is not quite as good. 11%, 4%, 3%, 9%. So the gaming ecosystem is actually showing great relative strength. And what this strength is indicating to me is that once we get this next leg up from Bitcoin, once we can confirm that we're getting another breakout and we can make that next push upwards, then gaming is going to be one of the sectors that outperforms. And, I truly believe that gaming, up there with Fantom, AVAX, and some of these strong L1 plays, will be some of the best plays in crypto right now. So you got to position yourself in the right gaming coins to profit. Once again, Hustle is the go-to guy for this info, so watch his streams. But I do have a few picks that I know a little bit about that I want to talk to you guys today about. Ultra is a project I really, really like. Once again, I won't go too in depth. I'll leave that to the expert. But I really like Ultra. They're basically building the Steam of crypto gaming. It's a project that's good because it has multiple titles under its umbrella, which will enable you to profit regardless of whether one specific game succeeds or not. I personally take the approach, a very long-term view on crypto gaming. I want to be in the projects that have multiple games under their belt. I don't want to be relying on one dodgy game to give me profits. I want to be able to kind of spread my risk out, because I'm slightly risk averse when it comes to gaming. So I prefer to go for the bigger studios, the bigger titles that can kind of deliver AAA games time and time again. Ultra is certainly one of those, because it's pretty much the Steam of gaming. It's going to have multiple titles under its belt. So I really like that. Superfarm is another great gaming project that I like. Obviously, they've got their NFT marketplace to compete with Looks Rare. I think it'll do really, really well. They've also got their own game launching under Superfarm, which we're not seeing from other projects in this space. So Superfarm's another project that I love. And I'll give you one more gaming pick. Once again, Hustle's the go-to guy for this, and he will preach these coins all day long. So if you want info on them, he has you covered there. But Vulcan Forged as well. I've been invested in this for quite a while, withstood the hack. Vulcan Forged is a great project. It's a great gaming project. It's a studio with multiple games. Once again, it has its own Vulcan metaverse, Vulcanverse, which is really cool as well. So those are the three I'd check out. Those are three of the gaming projects I'm most bullish on. Don't sleep on gaming, because if we do get this next push up from the market, DeFi is not the only place to be able to really profit in this market. Gaming is going to be one of those narratives that I think will perform really well in addition to some of these L1 players. So I hope you guys enjoyed this stream. This was my first week of streaming this DeFi show. And I'm really excited to come back and hit you guys with some alpha next week as well, because I have some awesome shows planned. We are just getting started on this show, guys. This is just the beginning. I'm just kind of walking you guys through some of the steps that I take to identify narratives, but I'm going to be giving you guys some serious alpha over the coming weeks as this show develops and gets better and better. So I hope you guys enjoyed the show. If you can do me one favor, smash the like button to show the love. I want to see that like button absolutely smashed. Show the Banter team that we are offering some value here, because I truly believe that this DeFi space is a space where you guys can really set yourselves up to succeed in this market and do really, really well and get some success from that. Thank you guys so much for tuning in today. I hope you enjoyed the show, and I will catch you next week for the continuation of the DeFi show. Catch you guys in the next one. Peace out.